Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the gold market. Gold market shows the very strong rally yesterday. This was in the background of the announcement, the outstanding liquidity injections from the Fed. So they said that they put no limits on the buying back on the bonds, not only the government bonds but also the corporate bonds, and they promised to provide as much liquidity as market will need, and that supports market across the board. So even on the stock market we see the pullback. And the gold market is not an exception. So if you remember, in the weekly report we said that this is not natural action. It's mostly the gold stands as the victim of the non-market driving factors. This is running into United States dollar just as the companies, investors, funds needs the United States dollar liquidity to cover the margin positions, to provide the background support for the day-by-day operational needs. So they need the United States dollar liquidity, especially for export companies. So as demand was too strong, it has led to the drop of the assets across the board as investors trying to sell everything that they could to accumulate as much United States dollars as they need. Now, with the recent step by the measures by the Fed, situation has changed, and we said keep an eye on the gold. Once it stops dropping, it means the situation is coming to an end. I mean, the running United States dollar and market will be more balanced. It's more common behavior could start in the market. So, but from the technical point of view, we consider actually two scenarios. So, despite that some relief on the markets, the chances on the two-leg retracement here exist, because if you remember, we are considering the hand and shoulders pattern here. And although the recent rally stands not in favor of the hand and shoulders, because on the hand and shoulders usually sell protection on the second part of the pattern should be slower, because bears should take the control of the market. Very fast acceleration, it's the signs of weakness for a pattern, and it's negative sign for it. But since this is mostly is due to the measure by the Fed, we need to keep watching what will happen, because currently market stands in an area that we have specified. So this is 1550 area, and also two levels actually, major fib resistance, and market stands right here around the top of the left arm. So approximately in the point where theoretically downside reversal should happen. So this is an area where we have to keep an eye on the two moments. First of all, there's opportunity to go short with a possible downward action could start. Second, this will be also the indicator, guys. So if market somehow will break through this resistance, starts upward action, well, that will be an indication that gold is preparing to continuation of the long-term bull trend. It means that in the nearest time we will take a look at the taking out of this top and creating the new top and upward continuation. That's why this level is very important. Approximately the same stuff as on the euro currency. So now let's take a look what we have on the intraday charts. On the 4-hour time frame chart, we have this ABCD in progress, and you can see our OP target has been reached. Market right now is struggling with this level. So as you can see, this previous double top neckline is resistance. It's also OP here, and this market right now stands here. So initially that was the first point that we have suggested for taking the short position. Currently, guys, with this fast acceleration, despite that market stands at our bond here, I think that we should wait a bit more and see what will happen, because well, actually, because acceleration, it's not good for taking the short position. You need to get a more gradual action or to reaching of the more extended target. In particular, I would suggest that we could keep an eye on this pattern. So we have the butterfly here. Market has hit the XOP and of this inner ABCD pattern. It's also 1.7 extension of the butterfly, is a 1580. Next target stands at 1630. This is 1618 extension, and it's very close to daily 618 resistance. So that's two levels you could keep an eye on for taking the short position. So you could focus either on this level, or you could trying to sell here as well, but anyway your stop should be above this level. So that's decision is up to you. You could, for example, take the 30% of your trade here with the stops above this area. If market will move slightly higher, you could add more with the same stop, or just wait when the market will reach this level. Because when the market shows the fast acceleration to the first target, guys, despite that it's a overbought, well, it's still chances exist on the further upper direction rate to the 1618. It's two moments to keep in mind. Finally, if you will put here the MACD predictor, you will see that today, tomorrow, we also could get the bearish grabber. And if indeed this will happen, that will give us more confidence for possibly taking the short position. And the last one, if you will take the short position here or here, put stops to the break-even as soon as possible. Do not marry this position. It will be great if we will get some kind of the A, B, C, top, D pattern to the 13 even area. Well, that will be just excellent. If you will take the short, then the market will collapse. So it will be excellent. But do not forget that we stand in a very important moment. So the breaking of this level to the upside will mean that we're standing in a long-term trend, and that is the upper continuation, guys. That's why if you will get lucky taking the short position and gold will drop, move stops to the break-even. And the 30% it will reach at least minor target of the butterfly. If you remember, 30% retracement is the minimal target for the butterfly. Well, that's what we will keep an eye on the gold market right now.